Hello and welcome to the Bitcoin Crypto Club weekly catch-up on Zoom. It is Sunday, the 27th of March, 2022, and today we're going to be talking about, well, whatever really. So we may talk about cryptocurrencies, blockchain, DeFi, NFTs, ICOs, STOs, yield farming. Could be anything really. It really depends upon what people come along to talk about, what they want to learn about really. So hope you enjoyed today's session. If you do, don't forget to subscribe. Do click on the like button, make comments even. And even better, come along to a future session. We hold these every Sunday at 7 p.m. UK BST. The clocks have just changed the UK this week. And so we welcome everyone to come along, open to all, novice and expert alike. So if you're a novice who's here to learn about crypto right at the beginning of your journey and you're hearing all these confusing terms and expressions, come along and ask questions, see if we can help you understand what they are. Or equally, if you're an expert and you've been in this space for a while, you'd like to share some information, some details, then come along and do that as well. Anyway, let's see who's going to come and join us today. It's always funny when you look at the expression on people's faces of someone just spoke to me then, and I'm not sure who it was.
Yeah, it's like I'm pressing buttons, but nothing's happening.
It's okay? Yeah, it's good. It seems to be a bit quiet on here this evening. I don't know, everyone's recovering from Mother's Day or the New Year, the clock change.
Well, yes. Yeah, I think the pubs have been busy, haven't they?
Yeah, certainly in my local town today, the pubs and the restaurants look like they're doing a good catch-up job today on a lot of quiet business lately. How's things with you anyway?
Yep, jolly marvellous, generally, yes. On the crypto side of things, it's been a bit quiet because to be honest, I've been busy doing other things. Okay. And I think to do it properly, you have to put a lot of time to it, especially if you want to do, little trades with small profits. So you just think, well, if I can't dedicate any time for the next 2 weeks, let's just not do it.
Yeah. That makes sense. You either commit to it and focus on it and that, or you adopt a strategy of, right, I'm going to go in at this point and then I'm going to leave it alone and it doesn't matter. And then on this date or whatever, I'll let check. And as long as you've got things like your stop losses set up or this kind of thing, which is a way of just like pre-configuring things to buy or sell at a certain price, then you're good to go. Yeah. But yeah. I do know some people who seem to spend their lives kind of like scalp trading and that kind of thing. And the amount of effort it takes them and the return they get just doesn't seem worth it.
Yeah, I think you've got to be doing it with big sums of money. It's all right making 20 quid here and 30 quid, but to make a living out of it, doing 20 or 30 quid a day doesn't work.
Yeah.
So to do 1%, it needs to be a decent sum that you've got invested.
Yeah, and I think this is something that people don't quite realise with the maths on this. I've done it a couple of times just for a bit of fun. I've gone and sat in a coffee shop at the beginning of the day, ordered a cup of coffee and spent the day scalp trading. So as you say, making 20 quid here, making 20 quid here, blah, blah, blah.
Yeah.
Or occasionally making 20 quid, then losing 40 quid, which seems to be more often than not. But overall ended up quite nicely ahead at the end of the day and, made a few hundred quid in a day, which you think, well, that's potentially, you could turn this into a living. It's once you're above a couple £100 a day, that then becomes a viable, you could make a living out of that.
Yeah.
But then you work out, well, actually, how much capital did I have tied up, which I could have potentially lost if it had all gone totally tanked up. How much did I need in order to make a couple of £100? And actually, how much effort did it take to earn a couple of £100? And when you work out what the minimum wage is these days of like £12 an hour or something, and you go, probably be better off working in McDonald's.
Yes, and doing this on the side.
Yeah.
Well, this week I watched a clip. I can't remember who the guy was. I don't really watch many YouTube clips because there's, I'm quite new to this, and there's a lot of people out there giving information, and to work out the ones that are genuine and the ones that actually have dropped lucky takes a bit of time.
Yeah.
So I don't watch many, but I did watch one very good one. And I like to, as you probably know, I like to keep things simple. I don't get complicated about anything in life. And the strategy was a 3-to-1 strategy, where you'll allow yourself a 1% loss, and you sell at a 3% profit. And using that strategy over a number of trades, you can make 6 or 7 losses, but the 3% you make on the 3 good ones actually leaves you in a net gain. Now, and I thought that was quite a good strategy. If you've only got a small sum of money, say you've got, £1,000, for instance, and you think, right, I'm going to split it between 10 different coins, but this is my strategy. So you pick your 10 and you do it. But to pick 10 coins on a same day, because yes, some days everything goes up, except the 10 that I pick, obviously.
Yep.
But then there's other days where you just think, hang on, everything's moving sideways. There's no slim pickings to be had. So there's a day where you're not going to earn any money.
Yeah. And I think your other problem as well, and this is where that approach doesn't work with 10 coins. Because if you think about, choose a random number of how much you're going to put in, £1,000, for example, and you say, right, £1,000 total cap. So that means that you're going to spend £100 per coin.
Yeah.
Okay. Well, if you say, I'm going to accept a loss of 1% before I sell, well, 1% of £100 is £1. So you can lose that in a blink of an eye almost with some coins. Yeah. And the bigger problem I found was when you are dealing with what's effectively penny shares in those kind of numbers.
In the old days.
Is that the commission fees and that, and what you'd pay for the transaction that would typically be between £12 and £15.
Yes.
So straight away, in order for you to make 3%, if you're going to bundle in the make 3% in addition to the amount it costs me, it means that the coin has to go up by like 10% or something.
Yes.
If you work the maths on how it all works out.
Yeah.
And that doesn't happen often with that many coins of it going up in 10% in a day. And then you go, well, hang on, even if it did go up in 10% in a day, if I've only put £100 in, then it's gone up 10%. I've made £10. And so I found that any strategy that dealt with more than a couple of coins just was not viable.
Right.
Simply because of the sheer costs and the exchanges and that kind of thing.
Yes.
And so what I tended to do was, rather than spread across 10 coins, because the other problem with 10 coins is that it's too much to monitor at once.
It is, yes.
Whereas if you maybe watch one or possibly as much as 2 coins in a day and make your 1% or 3% on those, yes, that I found more manageable.
Yeah, there are a couple of coins that I've watched from day one. One of them was Polkadot. That was the very first one except for Bitcoin, that was my first sort of one really, and I bought it at just under 20, 19.7 or something, sold it at 22, and I was like, oh, happy days. And then I carried on watching it, and it went back down to 10 or 11. So I was like, oh well, that's okay, I did well because I took my 10%. But then I bought back in at 11 and a half. And it's now at 16. So, and I'm thinking, you know, is it? So you're like, well, I've made a good profit. Do I take the profit and hope it goes down, or do I hope it goes up?
But that's where, you know, having a thought through strategy that you execute works. It's that discipline, really, because it's interesting that if you thought it was worth buying at 19 and it was worth selling at 20, and you thought it was going to get to 22, then that means you should be even more confident to buy into it when it's dropped down to 11
and up at 16. Yeah.
Well, you shouldn't even be thinking of getting rid of it at 16.
I see what you mean. Yes.
Yeah.
Should be at 22.
Yeah, unless there was a reason why at the time that you thought it was going to go to 22, that justified why you thought it was going to go to 22, and that reason no longer applied.
Yeah, that was in my first week of being involved with Bitcoin. So my reasoning was,
oh, that's a nice number. I'm ahead.
I like the sound of that one.
Yeah. No, I sometimes joke with people. You know, one of the profits I made once pre-crypto, when I was into stocks and shares and that kind of thing, was British Gas one day. That was literally, I walked into an early internet cafe, so this shows how long ago it was. And I happened to look at the price of British Gas, and I think it was on 120 or something like that. And I was looking at the chart and thought, oh, that looks nice. Put some money in on it. And by the end of the day, for some random reason, it had gone up to 150. And it's like, wow, you know, it doesn't come quite nicely. I've made like 25% or something in a day. I'm a stock and shares expert, me.
That's right. Yeah.
But fortunately, I knew that was pure good fortune and randomness, and it could have gone the other way. But that's it. I had no strategy. There was no insight. There was no thinking about doing technical analysis to choose the right point to buy. It really was. It was like going to the horse races and choosing the pony that looks pretty.
Yes.
You know, so there's no skill in it. Now, if I could have done that consistently, then maybe there's something in what I was doing. But good enough, I realized that it was nothing consistent. It wasn't that I had a pattern or whatever. And the people who do seem to do well are the ones who do devise trading strategies, and they'll commit to, right, I believe it's going to go down as low as this. And if it goes as low as this, I will do this. I believe it will go as high as this, and if it goes as high as this, I'll do this, and they stick to it. And if they and you find that people who stick to the rigor tend to do better than the ones who just go, oh, it's gone up, I'll have that. It's gone down, I'll go there. Because what ends up happening is they go into panic mode. So invariably, when things go down, and crypto is very good at going down, they'll go, oh no, I can't afford this, and they sell out, and then immediately it goes up, and they go, you know, buyer's regret, blah, blah, blah. Oh, better buy back in again. Good enough. As soon as they buy back in again, it drops down again. So they now double their losses. Yeah. You know, it's just not a viable thing.
Yeah. I mean, I you know, I have made some monumental mistakes. You know, and Jasmine was a classic. You know, if you look at the chart, you know, that very, very top bit, you know, that's where I bought it.
Yeah.
And I've still got it. But since then, when it's been actually quite low, I've made 2 profits on it with extra money that I put in. Okay. But I've still got that initial the initial purchase that I made that hopefully one day will
bring itself out again. Yeah. I mean, it's like
I think I'm going to be waiting a long time though.
Yeah. So there used to be one. I'm just having a look at it now. My favorite one. It doesn't really show now. I'll pull the chart up in a minute. I'll share it with you. Was a coin called Bitcoin Diamond.
Right.
And the reason I like Bitcoin Diamond was because it was incredibly volatile, and I'm sure it was being massively manipulated. But it was only going between 2 numbers.
Yes.
Let me just see if I can.
Yeah, and if you can get your timing right.
Exactly.
I wouldn't. I'd be the wrong. I'd have the chart upside down.
Well, I'll show you that there was something. If I just share the screen on this for a minute, it doesn't really show it very clearly now, but certainly in these earlier days over here, I don't know if you can see that.
Yes.
Yeah. It went through periods where it was just binary. It would go anywhere between 45, around here, and then you see it's like $44 on the 18th of July. Then the next thing, it would be $67, and then it plummets. And it was like up, down, up, down, up, down. And if you time those cycles right, it meant typically if you bought in at $40, then it would rocket up again. It doesn't really show it very well on this chart because the behavior changed. Because this is the thing that you find a lot of cryptocurrencies start having patterns. They have trading patterns for a while. And I think it might be that there's a pump and dump group or something like that who are just manipulating the market up and down. And then once they've exhausted that and people become savvy to that's what they're doing, they then step away from it. So if you can spot something, and I loved it for a while because it was like, oh, it's below 40, buy, sit back and wait until it goes to 60. Sure enough, it pump up to 60, sell, blah, 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 blah. And it's like, and then one day it just stopped behaving like that.
Yeah,
and it was never like it again.
But when you look at it from sort of 2018 onwards, it's done bugger all. A couple of little, little flutters, but where you've and that is a classic one where one day somebody that's got huge amounts of money will think, hang on, I can dump a load of money into that.
Yep. Everybody
will follow suit, and the next day I'll take it all back out because it will do 100%.
Exactly right. And it's like the other one that's been really active today is VeChain.
Yes, I saw that.
Yeah, and I think VeChain's gone up something like 30% today or something I saw earlier on. And again, it might be worthwhile if we just pull up the numbers for VeChain, because VeChain's quite well recognized in the crypto space because it's one of the crypto coins which has got its own blockchain. As opposed to it being a token in some way. So it's got its own fan base type thing. But if you look at VeChain, and again, this is one of these ones that if you were switched on to it, I don't know, does that come up on the screen? It was like meandering around the kind of like the 63 cents mark for a good while. And then it was, just here earlier on today, is that?
Yeah,
this morning, something? Yeah, and it woke up and it went from 68 to 78, which is quite a nice growth time thing. But again, you think, well, was that just some market manipulation going on? Was it some news that came out? And I think what happened was that it was going through its normal meanderings. And then I think someone noticed it earlier on today, just after midnight. And people started talking about it on the channels. Yeah. And this is where someone did quite nicely and then sold out. And then, at 3 o'clock this afternoon, it started hitting Twitter and WhatsApp and Telegram and that.
Yes.
And everyone's piled.
Yeah, I saw it on Facebook. So.
Yeah, and everyone piled into it and everyone's made a nice thing. So I think overall today it's up from the beginning of the day, it's like 30% or something. So it's not bad. No,
if I would have bought it, I'd have bought it about 4:30.
Yep, that'd be about here, would it?
Yeah, that's about there. Yeah, 4:34. That's when I bought it. Yeah.
And that's so often the thing, and that's why a lot of people are in so many groups because they want to get into it, an hour earlier or something, and be part of the whole exciting thing. And that's where I remember I was at a crypto event a couple of years ago in London, where it was a group of people who were getting together and they were syndicating. So what they were doing is that they're pooling all their funds in order to get into some early ICOs and some early crypto launches now. On the idea that when a coin launches, typically it spikes and then it dumps. And they said, oh, we'll get in on the spike and that kind of thing. and they were talking about getting into one particular crypto. And I can't remember what it was. And I said, you do know that that is a scam. It's a complete Ponzi. There's nothing behind it. And he said, yeah, we kind of thought it was, but we figured even if it is,
but you get out within the hour.
Exactly. Yeah, and that was their thinking. And they said, yeah, well, we're happy with that, because with when ICOs were a craze, you'd be talking about increasing the value of the coin by 30-fold in the first hour of trading. So of course, if it's going to go up to 30-fold, you actually only need to be in it for 20, and you're streets ahead of anything else, type thing.
Rest of the day off.
Well, exactly. And if you can multiply your capital by 20, in a day, then that's your ISA, like 10 years or whatever. So it's interesting. But it's always the case as well that everyone says, oh yeah, well, as long as I can just get in a little bit earlier than everyone else and leave a little bit earlier than everyone else, I'm ahead. Most people can't.
No.
Everyone thinks they can, but they can't. So
yeah, no, I wouldn't even. It's just and I know what I want to get out of this. It's a bit of enjoyment and to earn some money. I don't need to make a living at it, but if I can, create some extra cash, that then happy days.
But I think that there have been a couple of people who used to join us on this call, and they were of like minds, until they got to the point where they started making enough where they could actually go, actually I can make a living out of this. And I don't want to get out of bed of a morning, and I don't want to have a boss that I can't stand, and whatever. And so some of them have done it, and they just kind of scalp trade, and they do okay. They do quite nicely. But it comes back really to what you said at the beginning as well. It's really important, anyone listening to this kind of thing as well, about there are loads of sources of information. There are loads of people giving opinions, but you don't know who actually knows what they're talking about, and who is worth listening to. Absolutely.
And I'm a simple soul, so I do like things to be kept simple. And when some of them start talking about graphs, and they're doing it so quick, I'm just like, oh, I'm lost.
Well, the thing with people who like doing graphs, and it's usually around technical analysis, and it's like, oh well, if you look at this one here, and when it crosses here, this means this, blah 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 blah. They're always very, very good at using graphs to explain what has already happened.
That's right. Yeah.
And it's like, I used to go on share trading courses where it was exactly the same. And it's the same in crypto. Oh yeah, well, when this happens and this happens, and you'll see what happened to the price. It's like, no, what I want you to do is I want you to go to a live trading screen now.
That's right. Yeah. Put your reputation on the line.
Exactly right. And I remember going to a live, it was a stocks and shares trading, and it may have been with, I don't know, it was JP Morgan or Chase Manhattan or whatever. And it was a real live trader actually had come out of his trading room to talk us through some stuff. And he put a bet on there, and then he showed us how to buy into something, and good enough, an hour later, it dropped by 3 points.
There you go.
Yeah, and he said, but this
fine. Is a long-term one. This is a long-term one.
Exactly. But I always say to people, beware of anyone who's using charts to demonstrate how good their predictions of what happened in the past are. Look at them. And this is where it's good. There are a few people who come on to this call sometimes who will say, right, if Bitcoin hits 35,000, I think what is then going to happen is over the next week, it's going to drop to 28. So, that's pretty good. So they won't say, now's a great time to sell, but you can take a hint from that. If you see it drop through 35, they think it's going to carry on further south. So if you've got anything in it.
Yeah, I mean, there are some very clever people that are normally here that are, just way off the scale of what I'm doing. And there's a couple that are into NFTs, which I just don't understand. And there's one guy that is a trader. I'm sure he's a trader. And he's a very clever lad.
But I remember years ago that I worked in commodities trading, and we had a guy who was a professional trader, and so he traded oil and metals on a daily basis for our company, and he was off the scale clever. He was the brightest guy. He was phenomenal. He's one of these people who, when you're having a conversation with him, it was difficult to understand because clearly his brain was running so fast he could never finish a sentence. So he was kind of fascinating that you'd be having a conversation with him and he'd never finish any sentence because clearly his brain had already skipped on to the next sentence.
Already moved on.
Yeah. So he was hyper intelligent, but he started coming out with some trading strategies that we were looking at, and it's like, look, I'm trying to work out what this does. It was to do with crude oil or something like that. I said, one of two things is going to happen if this trade works. We are either going to own China, in terms of the sheer scale of it, or we are going to be bust beyond belief. And my problem is I can't work out which one it's going to be. And he just couldn't explain it. And it was phenomenal. So yeah, clever people are great, but if clever people can't explain in terms that less clever people can understand, then they're probably worth staying away from. Yes. Unless they package what they do into something that gives you a signaling system that says buy now, sell now. Anything more complex than that just goes. And again, the number of schemes you see where people say, "Oh, we'll send you buy signals, sell signals. We'll tell you how much to put in. We'll do all the hard work for you." Blah 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 blah. It's like, and why are you doing this for me? That's very kind of you.
It's very kind of you.
Yeah, and the reason usually is because you pay them a small amount to be a member of a bronze WhatsApp insider access group.
Yeah,
without knowing there's a silver group above you who are taking advantage of the fact they know what you're going to do shortly later.
Yeah, and then there's the gold as well.
Yeah.
Who knew yesterday?
Yes, yeah, and then there's the platinum group.
Yeah, that's right.
And it's the platinum group who are the ones who are putting the real money in and getting the real profits, and are also taking the commission on the fees of the gold, silver, and bronze groups. So
that's right. Yeah,
it's like any market, though.
Yeah. It's but I do with the people that are doing the graphs. There's one lad on a Facebook group that I'm on, and he does do quite a lot of explanations and things like this. And there was a very big long explanation of why something had happened, but his very first words were to the effect of, obviously, it can go up or it can go down.
Yep.
And then he did this really big thing about, and I was like, you didn't really need to write all that because you said what was going to happen in the first 4 words.
Exactly right. Yeah. I think I used to annoy people, particularly the novices in some of the groups, particularly on WhatsApp and sometimes on Facebook, where they'd say, right, does anyone know what's going to happen with this coin? And I'd always write back the smart aleck answer of, oh yeah, I definitely know what's going to happen. Yeah. It's going to be one of 3 things.
Yeah.
And they go, oh, right, okay, well, what's that? It's either going to go up, it's going to go down, or it's going to stay the same. It's one of those 3. It's one of those 3, and I just don't know which.
Unless I buy it.
Yeah. In which case, it's going to go down. Yeah. Exactly right. And there was someone talking about something totally different today. I think, actually, it was different subject. Someone was talking about property prices in Ireland. Does anyone know what the outlook is for property prices in Ireland? It's like, yeah, I think they're going to go up unless they go down.
Unless
they
there's a
might
recession.
Yeah, exactly. Yeah. So, I'll just polish my horoscopes and looking glass and this kind of thing, and I'll just go and go. So yeah, I find it fascinating. But it's amazing. It shows how everyone is always seeking the simple answers. It really is. It's like that old joke of those two inquiry booths where it's got a queue of people going up for the give me the answer. Has got a great big long queue, and explain to me how to work out the answer. Has got no one in it type thing. Everyone wants the immediacy, the instant answer.
Yeah. Just tell me whether I need to put my money in or not.
Yeah. Or if we're going to go more sophisticated, tell me when to put it in. So yeah, I've seen that. But it's still fascinating how that you still have people who will advertise stuff like, I will tell you when to buy and sell, blah, blah, blah. And you go, oh, wow, this is fantastic. Where have you been all my life? And for only $100, I will.
That's
blah,
right.
Blah, blah, yeah.
Oh, only.
Yeah. It's like that old one of, buy my book now on how to make $1 million.
That's right. Yeah.
And it just has one sentence in it. Which
write your own book.
Write a book. Yeah.
Yeah.
So you've been looking at the market at all this week, Dan, or
not seriously. I sort of while I'm at work and I've got 5 minutes, I'll just quickly have a quick look at what's happening. But no, nothing serious. Nothing serious. Just seeing what I missed and going, oh, I looked at that 2 weeks ago. Those sort of thoughts.
Yep. Because I don't know if you noticed that Bitcoin has been creeping up quite nicely over the last couple of weeks. It's actually heading back towards where it was at the beginning of the year, which is good. I was taking a look at it earlier on. In fact, if I just pull that up now, because one of the nice things is once it does break even compared to the beginning of the year, then normally it carries on going up a bit more, which is nice because then it means you can say that you're ahead. But I was looking at where it was at the beginning of 2022. I think it was around here. A little bit further. It's just a bit more round about here-ish.
Yeah, so
we're round about 47, and it's at 45 now, I think.
Yeah. And the last
so it's nearly there.
Have been gains. The last 2 weeks on the trot.
Yep. And so this is kind of nice where we're seeing it, rising from January. It's like some, roller coastery rides up and down and that, but there's definitely still a rising trend, which is good. And it does look like it's still, heading like it's going to break 45 shortly. In fact, it'd be interesting to see.
I mean, it's sort of.
Yeah, that looks like it might have just found a new resistance line just below 45. Interesting.
Yes, but then obviously 45 has been a key number for people because then you've got 2 red candles.
Yep.
So it's obviously been a key number for people to right when it gets to that.
So here's another one that I always cast doubt on when people talk about specific whole numbers being support and resistance lines. Because if you think about it, we're all psychologically attracted to the idea that 45,000 is a nice solid number that when it hits that's going to be what everyone's looking at, that's what everyone's watching, that kind of thing. But a lot of trading these days is done with robo process advisors or algorithms and that, which don't care if it's 45,000 or 44,993.275 or whatever. It's all to do with the percentages. But there is still this thing that people talk about. Oh, this was at 45 and this was whatever. It's like, no. If you take a look over here, this one where it leveled out, which was at 32 something. because a lot of this stuff is trading algorithmically, it's not a psychological number anymore.
Yeah.
Whereas in share trading, it was originally.
Yeah. What sort of percentage of the money in coins in the whole of the crypto market would you say is controlled by bots as a percentage?
Yeah, that's interesting, because I think I asked Peter the other week on that, and I'm sure he said it was a relatively low percentage, but I don't believe it is. If you take a look at how many wallets there are with over $1 million, first of all, then I think actually a lot of crypto isn't trading. So I think if we look at the crypto that is trading, I think there's a high percentage of that that's actually algorithmic, but I've got no data to support that at all. So it's a pure guess, and I might be completely wrong. But
because
it would be interesting.
Am I right in thinking that any money that's controlled by bots won't be in cold storage because they can't trade?
Correct. Unless you've got a bot that knows how to get it out of cold store. So you think about how a bot works is that it takes an amount immediately and trades it immediately. You can't so easily do that with cold storage. You could do if you've got like a nano ledger or something and you've got it configured so it all talks to each other. So you could still do that. It depends how cold the cold storage is. Technically, cold storage means offline. So it means unconnected from the internet. So you could trade from a hardware wallet, but it would be a hardware wallet that is connected to the internet and therefore technically is not cold storage. Cold storage means it's physically removed and not connected in any way. Yeah. So that's certainly that. The other thing as well is that some trading is done with like gearing and leverage these days.
Yes.
And that again skews things. I don't know how much business is done that way.
I think you need an awful lot of money behind you for when it does go wrong.
Yeah, I was going to say I've certainly seen some people who've had like margin calls where Bitcoin in particular has dropped below a certain level, so they've had a margin call where they've had to put more funds in and they've had to liquidate the position. And I've seen it a couple of times as well. This is where some of the exchanges aren't particularly liked, where they'll suddenly drop the price of something for no apparent reason, and it forces kind of like a shakeout of people, where it forces them to liquidate their trades, and then the exchange goes right, buy that up, buy that up, buy that up. And I think there was a period that some of the exchanges were doing that. That was just not very popular at all.
It's people use these exchanges because they think it's a fair system of cheap, of trading with very low fees. And then when they see the system they're using actually sort of screwing them over effectively, you think, why am I using you?
And this is where it all comes back to. You tend not to see that behavior on stock exchange trading because they're all regulated.
Because of the regulation,
and crypto exchanges typically are not regulated, and so they can get away with it. And they're more regulated by market behavior. So if everyone knew Binance were doing that, for example, then people would step away from Binance.
Yes.
But there's nothing formal in place. It's almost like goodwill type thing. So
that's right, to say that they won't do it or can't do it.
But certainly it's worth being aware of.
I like the idea that this is all unregulated, but then you are relying on the bigger companies and institutions that are controlling what happens. To some extent, you are relying on them being honest, and not just closing down with everybody's money that they've got.
And this is one of the
Caribbean.
Well, that's right, and this is one of the challenge with decentralized exchanges. So everyone's saying, "All right, decentralized exchange, fantastic. unregulated, no government control, no influence, blah, 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 it also means there's no protection.
Yeah.
So it is the classic buyer beware, that yes, it can give you access to some great opportunities, but there is the risk that the whole team behind it could disappear overnight, type thing. And
with your money.
Well, that's right. And these things do occasionally happen. And whether they happen maliciously or malevolently or whatever, or as was the case with I think there was a Canadian exchange in the news, the name of which escapes me now. I think it's about 3 years ago now, where the CEO went on a holiday to India and died under suspicious circumstances. And that was the point at which they discovered he was the only one with the private keys to the crypto they were holding.
Oh.
And it was like, oh, that means no one can get anything. And I don't know what happened with that story. But it shows why it is that, exchanges should never hold single sets of keys by single people. They should always do multi-signature and threshold signatures now.
Yeah.
But it does come back to this whole thing that you are putting your money into something where there's no comeback if it goes wrong. But then equally, this is where
you can put all your money into Hargreaves and put it all in funds, and all the funds go down.
Yep.
So and let's face it, I don't think there's an American fund or a Chinese fund that's made any money this year.
No.
So,
but
they're regulated, so that's okay for them to lose your money.
Yep. Well, the only difference is that if they're regulated, it means that they lose your money more efficiently.
Yeah. And the fees are bigger for them to lose your money.
Yeah. But that was the case. It was one of the guys who was ex-Hargreaves, who's now set up a new business down the road from me, in fact. And his fund got closed down because he was doing a load of trading in high-risk asset classes and that.
Right.
And for a while, he was seen as like the absolute awe-inspiring, go-getting, amazing guy. Until some of these high-tech shares started dropping, and he had a liquidity crisis because it meant he couldn't sell his shares off quickly enough to maintain his portfolio. And I think in total, the portfolio lost, it was less than 20% in total, I think. But they had to close it down. And that was a regulated, monitored, scrutinized, everything.
Yeah, there was one a couple of years ago, one of the big ones, wasn't there? Oh, God, who was it? There was a big one a couple of years shut down.
Yeah, that was probably it. Was it Michael somebody? I've got the name now, because he was an ex-Hargreaves guy, and he set up his own fund.
Right.
And that might have been it. Yeah.
I can't remember what it was.
But it shows, regulated markets, unregulated markets, these things happen. I guess the good thing with the regulated market is, the worst you're going to lose is 20%, probably. And there might be comeback if it goes wrong. You can totally go to court. Whereas with crypto, you could lose 100% and there's no one to go to.
Yes.
But equally, as you say, some of the traditional markets, the fees they take, it used to absolutely hurt to listen to my financial advisor each year coming along to say how pleased he was that my fund had only gone down by 15%, because that was ahead of the market. That was great.
That's right. Yeah, I did really well and obviously you're paying me 6% for that benefit.
Yeah. For the privilege of paying you 6%, I've only lost 15%. Whereas if I hadn't have paid you, I'd have lost 20%.
Yeah.
How about me not losing?
Yeah, that's right. Yes. Yeah. Because I've always, my beef with the fund, where most investments, is to say, okay, well, you want to take 3%. Well, how about I give you 3% of the profit that it makes?
Yep.
Or I'll give you 10% of the profit it makes. But the onus is on you to go and make some money.
Yeah.
They will not do it. They will not go near it.
I like it even more of, I will give you a commission on your results, which means that not only will I give you 10% of any profit you make, I will also charge you 10% of any loss you cause me.
That's right.
Yeah, and then they
they don't want to know, do they?
No, exactly.
No. Yeah. You've got to pay us 3% or 4%, because that's what we need to for our business to work.
We've got our overheads, we've got our costs. Yeah, we'll get your overheads and costs down. Yeah,
that's right.
Yeah, and get some skin in the game. So yeah, so this is the nice thing, at least with crypto, that you can get into these kind of areas if the FCA allow you to, because they've shut down a whole load of things. But at least you got the opportunity to get some exposure to some things that, yes, you could lose 100%, absolutely, but you could also make 1,000%. So it's bizarre if you think of it as just like a trip to the casino, where everyone says, well, at least as long as the casino acts legally, then you could lose all your money and we're happy with that. So it's almost like we need the regulators to think more in terms of just accept that people are willing to lose the money. Be interesting, actually, the FCA is currently recruiting for a head of cryptocurrencies. So it'll be interesting who they get into post for that. Because they might start and change things a little bit, see where that goes.
Yeah, I think I think with the and governments are all over the world. All world governments are concerned about crypto, because they will lose quite quickly, could lose control of the whole of all of the money in their country.
Yeah, well, this is where it's interesting that you find that there's a number of explorations going on at the moment. So there's a thing around what we call CBDCs, so central bank digital currencies. And what you're finding is that the big countries, so like the USA, the UK, China, Russia, are all exploring central bank digital currencies, which kind of like crypto, but they get to manage it.
Yes.
So that's kind of quite an interesting area. But some of the smaller countries, you look at Jamaica. Jamaica's launched its own government-backed coin, which I think is called a Jack's coin or something.
Oh, right.
Which is interesting. El Salvador now recognizes Bitcoin as legal tender. So what you're finding is that the smaller countries are more receptive to anything that gets them away from dependence of the dollar.
Of the dollar, yes. Yeah. So, I think governments are very worried, and they can't control it. So the only other option is to regulate it.
Yeah.
So
I was thinking, and that's where it's fascinating as well. You look at the regulatory interest. So in the UK, they've now closed down all bank machines, all ATMs.
Yeah, I saw that.
That deal in crypto, because what they said is that the people who are operating them are not registered with the FCA, and therefore they're operating illegally, which is fascinating because they say that crypto isn't a financial instrument.
Yeah.
Crypto therefore isn't a financially regulated instrument. However, we do still control it, which by the very virtue of the fact they've got control over it means it is regulated, even though it's not. So yeah, they shut that down. So it was interesting the other day that they shut down all the ATMs and that just at the point at which Dubai announced that it's launching its own crypto-friendly regulatory organization. So Dubai and the UAE and various areas around the Gulf states and that are very supportive of crypto. They can see it as like the new big thing.
Yeah.
So that's where it's going to be interesting. You look at the regulators. Yeah. So Monetary Authority of Singapore, Hong Kong Monetary Authority, they all are looking at crypto as potentially something that they want to support because it gives the governments or their economy at least some potential benefits. So see where that goes.
Yeah, I mean, and you know, they always come out with the line that, you know, well, you know, the big problem with crypto is it can be used for money laundering.
Yeah,
I know, because you know, nobody has ever heard of someone with a suitcase of £20 notes buying a car, have they? or a house or a factory unit or
I've seen
heroin.
I've seen someone getting on an airplane with a suitcase full of US dollars. And that kind of thing can happen. And it's fascinating as well, whenever you see the research that gets published around money laundering, crypto is usually at about the 25th most popular place, possibly even lower. I always say, well, when I'm doing training classes or workshops or whatever, I always say, like, I'm not giving financial, legal, or taxation advice, or criminal advice, but you will find that the most effective way of money laundering untraceably is the US dollar. It's way ahead there. But there is a concern right now with Ukraine and Russia, that there is talk that more and more Russians are beginning to try and put their money through crypto.
Yes.
And the thing that bothers me about that is that does kind of support this narrative of, oh, crypto's just used for money laundering and illegal activities. So we'll see where that goes.
Yeah. I mean, when they you see it on the telly, these police programs where they, chase a car and pull them over and arrest them because they're drug dealers, and they've always got a roll of £20 notes. They've never got a nano ledger in their back pocket, have they?
Can you imagine that if you've got like a gangster rapper or whatever, and when he's pulled over, instead of his gold bling, he's got like a Trezor or a nano ledger around here? That'd be quite horrifying. But yeah, this is it. That crypto gets this bad rap, which is completely undeserved.
Yes.
And actually, in some ways, I think that the law agencies perpetrate this myth around crypto intentionally, that it's a really bad thing and bad people use it and whatever. Actually, because they know it's completely traceable and they can monitor it and track it and that kind of thing. So,
well, that's right. Yeah.
Interesting. All right, Rob, we'll probably call it to a close then.
Yes.
So with that, have a great week. Go and wash your hands. Be safe. And
I'll hopefully catch up with you next week.
Right, cheers. Have a good one, Rob.
Right.
Bye for now.
Bye.
Bye.